You've been doing well and staying safe. It's Civic Day long weekend here, and we're going to continue our topic here on the macro environment, and obviously talking about GTA real estate as well. And I'm going to share with you some tips from experts if you've been thinking about your mortgage rate. Obviously, with interest rates rising drastically, that may have made you ponder. So definitely stick around. I will be sharing some thoughts from some experts and giving you my opinion as well. But the biggest topic this week has been inflation, and obviously the U.S. Federal Reserve raising interest rates here by 75 basis points. And the topic of is inflation peaked? And we're hearing from different parties. And I'm going to bring that all to you and a bit of my perspective as well. I am a wealth management advisor specializing in mortgages and life insurance. If you have any questions or curious about anything, reach out to me. I have my Twitter and Instagram handle below in the description, along with all the articles, so you can definitely review at your leisure. And I always say, if you're, looking for advice, reach out to your trusted advisor. It's always great to work with someone and get another perspective. And that's what we're going to do today, is bring you this perspective of mine and obviously of the individuals in these articles. So let's kick it off here. This is the first article here from Financial Post. Cheer up, Canadians might get relief from hot inflation sooner than they think. And this is really based on commodity prices dropping about 20% in the last little bit. And let's just go through a bit of the information here. We know we're facing the hottest inflation in 40 years. And the most recent reading by the Conference Board of Canada is seeing consumer confidence falling by another 6 points, and after dropping 8.8 points in June. And inflation obviously has a big piece in that, right? But here we have some comments. Yet economists are starting to see light at the end of the tunnel. Canada's latest inflation rating show the consumer price index rising to 8.1% in June, the biggest year over year since January 1983. But they say they're seeing some encouraging signs. For one thing, they expected that number to come at 8.4, but it came at 8.1. So, that's here and there. As well, Capital's own calculations show that there's a certain bucket here of CPI trim index that rose by 0.3% month over month, not far from the average 0.25 necessary for core inflation to eventually drop back. So there's certain numbers there in terms of what basket of goods they're comparing to, and that didn't rise as drastically. And here we have a comment here from BMO chief economist Douglas Porter. There are signs globally as well that inflation may be at an inflection point, and commodity prices have fallen 20% in the last 6 weeks, bringing them back to levels before the Ukraine invasion here. However, there was also a pivot here by the Federal Reserve, where they made certain comments that they may be less dovish. They're going to be really data driven in terms of their next decision in September, when Bank of Canada will also be making their decision. So that definitely had the market looking up. Then we have comments such as here from Loblaw saying inflation has or will soon peak as it books $387 million profit in the most recent quarter. This is an article from Wednesday the 27th. No Frills, Loblaw's companies, says it sees signs that inflation has or will soon peak as supply chain issues normalize and central banks take aggressive action towards taming prices. This is from Canada's largest grocery store following the release of their second quarter, where they said the company expects inflation to moderate in the second half of the year as commodity prices decline from highs, freight costs shrink, and supply chain issues continue to normalize. Having said that, supplier costs are still high, putting sustained pressure on retail prices. We continue to work hard to reduce their effect on our consumers. Fruit prices have soared through 2022, putting pressure on many Canadian households and obviously, forcing many to cut back on purchasing just essential goods. Again, last week I shared an article with you that, milk prices are going to go up potentially in fall here. So what that means for other items at the grocery store. So time will tell. However, this is one of the largest grocery chains in Canada. So what they say does take some weight. And why there's a little bit of mixed signal, and depending where we go here, is because of job vacancies. And I'll take you through this. Financial Post from July 28th, Canadian job vacancies climbed to fresh records, signaling inflation pressure. So this is some of the other things that continue to stick around. That stickiness. Job vacancies, an economic indicator that Bank of Canada Governor Tiff Macklem is watching closely. It's climbed to a record high in May as employers continue to struggle with filling jobs in the heated labor market. If you're looking for a job, it's a great time. You've obviously seen those signs at the stores in terms of looking for help, and obviously you've seen what's going on at the airport in Pearson in particular. Statistics Canada reported July 28th that there were about 1.5 here unfilled positions at the beginning of May, up slightly from the million in April. Again, the May number was 42% from a year, higher than a year earlier. So that just tells you how many job, availabilities they are. Vacancies are an important sign of what the Bank of Canada calls excess demand, as the inability inability of companies to hire enough people to keep up with orders suggests the economy is unstable to supply all the goods and services consumers and companies are seeking to buy. And this mismatch, is one of the factors driving inflation, along with obviously rental rates. Fastest in 4 decades, prompting Mackelham to raise the benchmark rate by a full percentage point. And this was a month earlier in July. Again, Bank of Canada's next decision is in September, and we'll see what happens in terms of what they raise it by 50 basis points, 75 basis points. I'm sure it's not going to be another dollar here, or another percent, I should say. Here, I want to talk to you about, some of the tips and tricks or some of the suggestions here by mortgage specialists if you're worried about interest rates and obviously how that affects your mortgage. So this is from CBC. Panicking over interest rates, mortgage specialists share advice to help ease stress. So this is definitely some experts in the market. Again, I specialize in mortgages, and I'll take you through what their thoughts are and what I think as well. So mortgage specialists say they're busy than usual, answering panic calls from Canadians holding variable mortgages set to renew or who want to know how to save money in the face of rising interest rates. And this is John Butler, who definitely chimed in. He's definitely an expert in the industry, and I'll take you through his thoughts. He says people have great concerns about how far the interest rate's gone, especially since it's widely speculated Canada's central bank is expected to boost its rate by another 0.5 to 1% in the fall. So this is September. So shop around. In today's marketplace, if one bank is offering you 5.09, another bank is offering you 4.89 or 4.79, that's a quarter or a half percent difference. I mean, you would want to get that because literally every dollar counts, obviously, in today's environment. And this is from Angela Kella, who's based in British Columbia. But applying to different banks can hurt your personal credit score because they are pulling it up every time, and that obviously affects your overall score. They suggest using a mortgage broker to hunt for deals because their services are free, they're compensated by the lender, and they can compare rates and options using just one application. And that's accurate. I am a mortgage agent, and I can definitely compare different rates from different lenders and obviously the different deals they offer. So that is definitely true. The age-old question, fixed versus variable, again from mortgage broker Lori Grill, says unfortunately there's no right or wrong answer. It really depends on your preference, and there's risk and benefits to both. And she mentions here sometimes they want clients, somebody to make that decision, which she says she never does. You'll have to make your own decisions on that, and that's really weighing the pros and cons of each and what works in your situation. And third here, not all variables are the same. Grill suggests people increase their payments to match the comparable fixed terms if they can, because that added money goes directly to the principal and it will help you pay off the mortgage sooner. Butler says that advice is now important than ever these days with respect to variable mortgages that offer static payments regardless of rate changes. So some of the banks offer static variable product which keeps your payment the same regardless of as prime rate goes up. It just less goes towards your interest or your principal, I should, and more goes towards your interest. Whereas variables that have adjusted variable mortgage rate, they adjust. So as interest rates or prime goes up, the payment goes up. So the same amount go towards your interest and principal. This means when the interest rate goes up, less of your payment goes towards the principal. In some cases, the rates go so high that a bank can call you, at their trigger point. And the trigger point is when the interest grows so much within the mortgage payment that, there's no longer any principal being paid. You actually have a mortgage that's growing each month because the payment isn't covering the interest. So if you reach that point, your bank will definitely be reaching out. So if you're curious, if you're at that point, I always suggest reach out where you got your mortgage and ask these questions if you're curious, obviously, what your situation is. And continuing along here, I just want to quickly show you here, the U.S. housing market is definitely in a cool down as well, and that's one of the indications of a recession. In this article, that's what the individual contests, that this is a big part. Obviously, we've been hearing a lot of recession talks this past week, so if you're curious to read this as well, I'll definitely have it in the description. And the last thing I want to cover with you is some data. What's going on in today's marketplace? This is from Scott Ingram. He's a realtor here, particularly focused on the 416, the Toronto area. So weekly, looking at active listings and month-end inventory, same story that that's been for the last while. Listings holding steady, but sales are slowing as month of inventory is increasing. There's a difference from the same time last year. Obviously, what was going on in 2021, and we can see here this upward trend of obviously where homes are. So freehold and condos greater than 3. This score here of a months of inventory since 3 weeks from April 2020. So that tells you obviously how long it has been since we've seen this much inventory in the marketplace. So that buyers are on the sideline, sellers are trying to find the right price, and obviously activity has dropped because of where mortgage rates have gone, and as of course of interest rates. So of course those were the early days of the pandemic. Here you see the freehold active listings. There's been between 24 to 2,500 inventory on the market for the last 9 weeks. So good for sellers. So obviously that number isn't rising, but that normally is a downward trend through summer, as we get through obviously in Christmas and December time. We're seeing the same thing for condos, steady range in the last 4 weeks, but usually declines in the bit in these weeks. But it's good to take a look under the hood. The overall number in there, you'll see there's a lot of aging. So these houses have been on the market for 30 days, and that's 1,887 listings of 30 days plus on the market are the same as the total number of condos that were available on March 1st. So think about that. Homes are not selling. Sellers have to work harder to get those, their homes sold, and obviously find the right pricing. So I hope you guys found this helpful. There's lots been going on, lots going to continue. 3 things I want you to take away is really inflation. Has it peaked? Has it not? Curious to hear your thoughts. Definitely let me know. Hikes continue from the Federal Reserve here. Obviously, Bank of Canada raised by 1%, and we'll see what both of them do in September. And really housing. There's a lot of housing on the market as a purchaser, and obviously sellers are trying to find the right price, but rents have gone up drastically as well. So it really depends where you fall on that occasion. So guys, any questions, any comments, any likes, any subscription will be much appreciated. It definitely is motivation to continue doing this on a weekly basis, and I hope you found this helpful. So thank you, and I hope you enjoy the rest of your day and have a great week. Thank you.